Everyone on YouTube has been pushing stock picks after stock picks, with the likes of LA, Brandon, and Jeremy. They're all giving their take on stocks to buy every month and speculate on short-term gains. Then there's the Dividend Investing crew with the likes of Andre, Ian, and Joseph. They're buying for long-term and calculating how much passive income the portfolio generates. And what's the one thing they're selling, you ask? To get rich, either from short-term capital gains or long-term dividends. But there are more than two ways to make money in the stock market. Here we have Handyman Joe. Joe only owns a wrench and a screwdriver. He's limited to what he can do on the job. He goes through his career finding opportunities that only require these two tools. Then we have Handyman Bob. Bob owns a toolbox. Inside are drills, pliers, axe, etc., etc. So his capabilities are more versatile than Joe. Therefore, he makes more dough. Let's see. So instead of only having the stock picking and dividend investing methods, why don't we explore the many other tools you can use to maneuver against different market conditions? Welcome to Money Insiders, where my one and only goal is to increase your financial literacy by 1% every video. Number 1. Stock picking. Buy low, sell high. It's pretty self-explanatory. We buy a stock for $10 and sell it for $15 a year later. Then the profit will be $5. Easy. Let's take Disney for example. If we bought it at $112 last year and sold it at $144 this year, our profit would be $32 or 28.6%. Number 2. Dividend investing. We go to finance.yahoo.com, type in MCD for McDonald's stock. We see here that the dividend payout for this stock is $5 or 2.49%. This simply means that for every share of McDonald's you buy at the current price of $207, they'll pay you $5 to hold it for the next year, doing absolutely nothing. Now let's move on to the lesser known methods. Number 3. Shorting a stock. It's the opposite as number 1 method of buy low, sell high. We sell high, then buy low. For example, if we sold the stock for $10 and bought it back for $5 a year later, our profit would be $5, subtracting the interest for shorting the stock. For instance, if we shorted Uber at the IPO price of $47 and bought it back at $34 this year, we made $13 or 27.7% gain, minus the cost of borrowing the stock. For this instance, it's 0.25%, so your total gain will be 27.5%. Number 4. Stock Yield Enhancement Program. It's linked to number 3, shorting a stock. If you currently own a stock and don't mind lending it out to make some extra dollars. Not all brokerages have this, but the one I use, Interactive Brokers, has it. The interest ranges from 0.25 to 10%. Now we move on to the last 4 methods, is dealing with stock options. This instrument could be intimidating, but could lower your risk while maximizing your rewards if used properly. Number 5. Long call, and number 6. Long put. Long call is a bullish speculation while long put is a bearish speculation. These tools are leveraged for maximum rewards. For example, on November 13th, Disney stocks jumped 5% on the news that the Disney Plus surpassed 10 million signups in 24 hours. This is an extraordinary case. If we look at the low of 16 cents and a high of $10, is over 6,000%, or 62.5 times in a couple of hours. It's certainly a home run and tough to replicate, but now we see the power of long call, turning $100 into $6,250. Wow. Let's compare that with a Disney stock investment of $100. If it won at 5%, we gained a whopping $5. To put that into perspective, you would have needed to invest over $100,000 for the same $62.50 profit. Number 6, long put, is just the inverse of long call. So if you're bearish towards a stock, you can consider purchasing some put options for the leverage effect. For example, we have Six Flags, a business that's based on the theme parks. On January 10th, the stock tanked 17% in a day due to its China partners going to default. The put option here shows the previous day of 20 cents and today's price of $2.30. It's 11.5 times in a day, $100 into $11.50. If someone shorted the stock for $100, they would have made a whopping $17. To put that into perspective, you would have needed to short $10,000 for the same effect. It's less substantial than the Disney case, but it shows that these cases happen quite often. Number 7, short call, and number 8, short put. These two ways are sometimes called premium harvesting. Number 7, we're setting a price ceiling for a certain stock. For example, I've done so for Netflix 357.5 on January 17th, 2020. It's currently sitting at $329, so if the stock doesn't jump $30 by the end of this week, I'll collect a premium of $104. Number 8, we're setting a price floor for the certain stock. For example, I've done so for Alibaba $205, January 31st, 2020. It's currently sitting at $224. If the stock doesn't tank $20 over the next 3 weeks, I'll collect the $99. So that concludes the 8 methods to make money in the stock market. There are various degrees of risk and rewards for each. We will discuss in depth of each of these methods in the future videos. What do you think? Have I increased your financial literacy by 1%? If yes, then consider subscribing and dropping a like. Otherwise, you can comment and let me know how I can create more value for you. Take care and have a good one.